Welcome back, folks. This is volume number 17 in a continuing series of 20 videos for the Optimal Trade Entry Pattern Recognition series for the Inner Circle Trader YouTube channel. Our example today is from the British pound, or pound versus dollar, and we're looking at the daily chart here. And I'm going to save you a lot of time and just simply state that we have retail resistance up here, and that's going to be likely a draw on liquidity. Now, here's one of the things that you're going to have in your notes. When you're looking at a daily chart like this, it's not important or even required that price trades from this level here all the way up to that level and higher. It just needs to draw towards it. That's the reason why I call it a draw on liquidity. Now, again, the ideal scenario would be to see price trade up there, but it's not required, especially if we're looking for day trades or intraday trades, which is the scope of this series, focusing primarily for moves within the 8:30 a.m. to 11 a.m. New York session. So here is last Friday's daily range, and we expect these highs to draw price up. Now again, it's not imperative that it goes all the way up there, but it's more likely to go that direction than it is to go lower. So we want to put our line on the daily high, which comes in at 123.94 and 1 pip at. And we're going to go over to our 5-minute chart. Okay, so here's our British pound 5-minute chart, and you know the drill. Pause your video. Okay, so let's add the annotations now. And right away you can see we have our optimal trade entry. Price move here, drops down in after 8:30 a.m. Move drops down into the 62% retracement level. Our hypothetical entry is 123.88, and it suffers 3 pips drawdown. Stop loss is 15 pips, which puts it just below this low here. At the old high, we have a 1-to-1 right away at the old high at plus 15 pips. At 1/2 a standard deviation, it's up 29 pips. 43 pips at 1 standard deviation, 1.5 standard deviations takes us to plus 56 pips, and ultimately at 2 standard deviations where we would kill the trade at 70 pips. Now obviously in hindsight you can see it went a little bit further, but again I lean on the fact that the rules for this model says we have to bail on the day trade at 2 standard deviations. Again, there's going to be trades, if you follow this model, you're going to leave money on the table hypothetically, and you're either going to have to accept that, or again, if you think you're going to go higher than that, leave a leader in other words, a small portion of your original position, to see if you can capture anything, especially based on what we showed on that daily chart. So that's going to do it for today. Hopefully you found this insightful. Until next time, I wish you good luck and good trading.